Hello, everyone. Welcome to the Ashworth Wealth Weekly Market Update. We'll kind of jump into this week's slide and kind of get a feel for what's going on in the economic world. This week, we're talking about record tariff revenue for the country. One of the big questions while we've had record tariff revenue is who's paying for those. One of the things that when we look at the promise that was made by the administration is it would make the government richer. Well, that's certainly happening. The government is taking in record revenue. The number for the first 5 months of the year was about $60 billion, which is almost double what it was for the same period in 2024. Much of that came following the sweeping tariff hikes, which had the baseline of 10% on nearly all imports, plus on higher tariffs on certain select sectors and countries. But the big question is and one that the Fed is currently watching is who's paying for these tariffs. Data released this last week shows that import prices rose by about 0.3% in May and are up almost 1% year to date. But those are calculated before tariffs. So if foreign producers were truly eating the tariffs, prices would have fallen roughly by the increased tariff rate. So to offset higher costs, U.S. importers are facing a big question. Do I pay for those myself? Or do I kind of pass those through? It looks like right now they're starting to pass those through, and so we'll kind of keep an eye on what's going on there. But I think any economics professor would tell you that usually tariffs are going to be passed on to the consumer. The question is how will that be short-term or long-term in nature? So for right now, we're on the hook for the margins and paying the extra margin that the tariffs may have. However, the Fed has still decided not to cut interest rates. You could say, well, if the Fed cuts interest rates, that'll save me money in other areas of my life, and so I can cover the cost of the tariffs, etc. So we'll see. But as of right now, they're not looking to do that. Currently, we have stretched U.S. equity valuations and living margin pressures because of the tariffs, which leaves limited room for upside on the domestic front. Doesn't mean that's a long-term goal situation, but it's just like we've seen earlier this year as we've met with many of you talking about what's going on in the international front. The Eurozone earnings are very, very high. The revisions that are coming in are even higher, and they're still trading at a steep discount. So we're seeing a lot of growth on the economic side from the European equity side of your portfolio. So as we look forward, the question is how does this going to impact it? We don't know exactly. Everybody has an opinion. I've always joked for years that economists have predicted 11 out of the last 4 recessions. They're always predicting doom and gloom. So anytime you have a change in policy, people always say, oh, it's going to cause this, it's going to cause that. Yes, the tariffs are raising revenue. Yes, pricing is a little bit higher, but inflation has continued to drop. Now, once again, we're not talking deflation. We're talking about the rise of prices has continued to drop, even with those tariffs in place. So it'll be interesting to see how that goes long term. But for the most part, the broadly diversified portfolio is the best way to go. You still have access to domestic positions, you have access to international positions, and you're able to minimize the overall impact of any one or two different economic things that a government or an administration tries to do. So we'll look forward and kind of continue to monitor things. But for the most part, the tariffs are bringing in money, but they're also costing the consumer a little bit of money as well. So we'll see what the Fed acts to try to ease some of that pressure and go from there. That'll be it for this week. We appreciate you taking the time to look at this each week, and we'll reach out with any other questions. We're more than happy to answer anytime. We'll see you guys next time. Thank you.